Appreciate you spending your time with us here on Retire ATL, all powered by the Vincent Financial Group. 770-741-0120. Again, 770-741-0120 to reach out to Aaron, Vincent, Matt Decker, and the team at Vincent Financial Group. Of course, you can always get more. Meet the team, schedule that consultation from the homepage at retireatlradio.com. And Matt, spending a lot of time this weekend talking about that retirement roadmap, which you're offering our audience here this weekend. But let's break it down. Walk me through. I get out of my car, I walk through the front doors of the home office of the Vincent Financial Group. Then what?
Well, you're going to be greeted by somebody that's happy to see you. We might offer you something to drink, maybe a coffee, might have some cookies for you. But the reality is this. Our first appointment is super relaxed. You know, if you've been to the doctor's office, I can promise you a couple things. We're going to have more comfortable chairs. The atmosphere is going to be more inviting.
Very good.
There's going to be better decor on the walls. And instead of you doing, you know, a lot of kind of nervous, I don't know what's wrong with me type stuff, we're just going to be asking questions and we're going to get to know you. And if you like us and if we like you and you think we can help you out, then we're going to be off to the races. But we're not going to be asking you for any type of credit card information.
Sure.
There's no payments. You don't owe us anything. We exist in business for you.
Right.
That's why we're here. We like helping people. We're really good at what we do. And we spend a lot of time during that first meeting getting to know you, understanding what your goals are, figuring out, you know, what is it that prompted you to make the call? Why now? Something changed in your life? Are you getting closer to retirement? You know, maybe you got some inheritance. Maybe you just left an employer. Maybe you just had grandkids. Maybe you got grandkids going to college and you want to help. All kinds of reasons why you might kick up the conversation. But initially, it's just going to be getting to know you and you getting to know us. And if we jive, then we're going to be off to the races and we're going to have a good time.
You mentioned before that Zoom is a very powerful option that you use at the Vincent Financial Group. You use it all the time.
Yep.
Do you have any clients that you've never actually physically met face-to-face?
Well, it's interesting. So I handle most of our out-of-state clients.
Right.
And Aaron deals with basically all of our local clients. I deal with local clients as well, but fortunately or unfortunately, I have drawn the straw that does a lot of the Zoom out-of-state calls.
Right.
So I have probably 100 clients out of state that I've never actually sat in the same room with.
Sure.
And we get together 2 or 3 times a year. And I have some clients that decide, you know, it's maybe 5:30 and they crack a cold one on the Zoom call. And we talk finances, you know.
If the call goes great, hold on, before we wrap up, that's fantastic.
Well, I won't be cracking a beer, but, you know, sometimes some of the clients do. They have some fun. You know, over the years, even though it's Zoom, you still get to know people. You get to know their families. You get to know their spouses and their kids. And so it's interesting what Zoom has done to our business.
Yeah.
And we had so much, I guess you'd say, success with it for out-of-state clients. We started offering it to the Metro Atlanta area folks, and a lot of people prefer it because you don't have to sit in traffic.
Exactly.
You don't have to worry about scheduling and being late, and it's a lot easier, especially for those initial calls.
Yeah, and especially for those that you just mentioned traffic. My mom's gotten to the point now where she doesn't drive on the highway anymore, and B, she doesn't like driving at night anymore. She's just at the age where she's still comfortable.
I agree.
We're not to the point where we're taking her keys yet. You know, I mean, she's still fine. Everything's good, but she's personally said, I'm done with 285. I'm done with 75. I'm done with it all. You know, and once the sun goes down, I'm at home.
I get it.
So the Zoom is a very powerful way for her to stay in touch with the grandkids. So the reason I ask about Zoom, about not ever meeting a client, because there's probably somebody listening this weekend that lives down in Macon, that maybe lives South Georgia, maybe traveling through town, maybe North Georgia. And you know what? I'd rather just do these from my house.
I don't actually go into the doctor much anymore. I do the telenurse Zoom calls. Most people do. It's free in a lot of cases.
Yeah.
It's a very convenient option.
So you can meet the team. You can begin these conversations with a phone call to 770-741-0120, or, of course, online, retireatlradio.com, and just put in the contact form. Just might want to take advantage of that retirement roadmap. Let's begin customizing a plan, or maybe I just need to find out where am I? That initial consultation, it's no cost, no obligation. 741-01. Let me try that number again. Sorry, Brandon. I'm like, why all of a sudden are you not giving area codes anymore? 770-741-0120 or retireatlradio.com. There was a lady that wrote into Market Watch, and she asked the question, Matt. She goes, I'm paying my advisors 2.5% to manage my $600,000 account. Now, he's a fiduciary.
Are we sure?
She goes, that really feels like a very high fee. What could or should he be doing to justify that 2.5%? In this great article on MarketWatch, some of the advisors, they responded, they weighed in. One person said, none of us are worth 2.5%. Another one said, for that, you should get tax planning, advice on employer benefits, cash flow insurance, estate planning, and more. Just investment management is not worth 2.5%. When you hear that, what's your reaction, Matt Decker?
I've got so many thoughts about this. Number one, I love the question. I love the comments. None of us are worth that. That's interesting to me because that's essentially your hedge fund model, 2 and 20. I don't know if our listeners are familiar with hedge funds, but essentially 2 and 20 would mean they're going to charge you 2% per year and 20% of the gains. So that ends up being way more than 2.5%. So your big hedge funds out there, they are all in good years charging well above 2.5%. And then the other one is funny. What should you be getting for 2.5? I think the other advisors said you should get tax planning, advice on employer benefits, cash flow insurance, estate planning, and more. And I read that and I think, well, man, we do all that,
right?
Should we be charging 2.5%?
What are we doing wrong?
Can we double our revenue overnight just by
we'll throw in an oil change while we're at it.
Exactly right. It's funny. We do all these things at Vincent Financial Group, tax planning, advice on employer benefits, cash flow analysis, insurance planning, estate planning, alongside the investment management. That's all part of the full-blown retirement plan. You get your tax map, you get your portfolio analysis, your portfolio deep dive, and we charge well below 2.5%. So maybe, I don't know, Mark, maybe we should increase our fee. No,
we're learning something.
Interesting. This is market research for us. No, we won't be increasing our fee to 2.5%. And I do think that 2.5% is a rather crazy amount to be paying an advisor on an annual basis for simply portfolio management. I would agree that it's not worth it for that. At the same time, I don't necessarily think that this is the full story, right? Because whenever we're just talking about one side of the equation, we're quoting a fee, but what are you getting in return? It's really a value exchange is what people should be focused on. Should you just go out and find the advisor that's charging you the smallest amount possible? You could do that. But then the question becomes, is that a good deal? I have no idea. What are you getting in return? Yeah. If you're not getting anything in return, then you're still wasting money.
Yeah.
And on the flip side, someone's charging me 2 and 20, like the hedge fund model. I'm getting ripped off. Well, maybe, but what if the returns are justifying the fee, right? So we have to have a conversation about the value exchange. What are you getting for the fee that you are paying? But I will tell you this. If you're listening to us here on WSB, maybe you're driving, it's still rather early, but here's what I'll tell you. Your advisor, if you have one, should be able to justify their fee. They should be able to justify their fee. And I don't mean, we justify our fee because, we do tax planning and we do cash flow analysis and we talk about your insurance. No. I mean, when you look at your retirement plan, when you look at your full-blown retirement plan, let me say it a different way. When we show our clients their full-blown retirement plan, we can say, we are charging you this much per year. And before you came to us, this is how much you were going to pay in tax over your entire retirement. And here's how much you were going to generate in income over your entire retirement. After going through our plan, we've saved you X amount of dollars in lifetime tax, and we've increased your income by, whatever the number is. We can actually point to the plan and show our clients how we justify our fee. If your financial advisor cannot do that, cannot point to numbers and saying, this is where I'm justifying my fee, then maybe you are not getting the value exchange that you deserve and are looking for.
Right. And is that conversation part of the initial conversation that you'll have as you're customizing a plan at the beginning, or do we get to that a couple of sessions in?
Well, it's going to be impossible for us to give that to you up front.
Okay.
Because that's going to take work on our end to determine just how much better can we make your scenario. Oftentimes we don't know in meeting 1, but by meeting 3, you will know. Yeah. And you can actually see, the big one is lifetime tax. We can break down how much you are going to pay Uncle Sam over your retirement. And for a lot of clients, we see 6-figure reductions in lifetime tax paid to Uncle Sam. And gosh, it's so easy to justify our fee when you can show it right there in black and white.
Yeah. And these are the conversations that if you're not having with your current financial advisor, maybe this is a wake-up call, because we mention it a lot here on Retire ATL. Nothing wrong with asking for a second opinion. Maybe you're working with a big box advisor and feel like your needs aren't being met. Maybe it's time to find out, you know what? I haven't had the fee conversation in a couple of 2, 3, 5 years. Nothing wrong with asking the questions. And if it doesn't feel right, reach out to the team at the Vincent Financial Group, 770-741-0120. Again, 770-741-0120. You can meet in person at the home office in Woodstock or via Zoom, however is more convenient for you, and take advantage of that retirement roadmap from Matthew Decker, Aaron Vincent, and the team at the Vincent Financial Group. Another big conversation that's come up a lot lately are about RMDs, basically the government's way of getting its tax back on retirement accounts. Now, starting at the age of 73, anyone with a traditional 401k or IRA must begin taking your RMDs each year. But is there a way, Matthew Decker, is there a way you can skip RMDs if we're still working?
Right. So RMDs are interesting. You'll either pay RMDs at 73 or 75. It depends on when you were born. It used to be 72, 79. There's been a bunch of different numbers when RMDs start based on when you're born. But now we're basically down to age 73 or 75. And you're right, but let's be very careful, right? Because we're talking about taxes and rule of law in a way. And so we have to be very specific.
Right.
You can avoid RMDs on your 401k that is with your current employer if you are still employed.
Say that again.
So you can avoid paying RMDs. Let me say it a different way, actually. Instead of just saying it again, I'll say it differently. There are no RMDs on a 401k if you are still employed with that employer, same employer, right?
Sure.
Your 401k is tied to that. So we're in Atlanta, you work for Coca-Cola. Maybe you got a 401k there. Okay. If you're still working past age 73 or 75, depending on when you were born, and really it's 73 for the people that we're talking about now, you don't have to take an RMD on your 401k as long as you're still employed. But that is not true for any funds you have in qualified accounts outside your current 401k. So even if you're still working and you have an IRA, maybe from a former employer, you do have to pay required minimum distributions on those accounts. But let me just back up even further. I love the setup. You can avoid the RMDs, but let's just first get out on the table. I'm going to say something controversial. Are we ready?
Let's go.
Okay.
Wake somebody up.
Here we go. RMDs are completely voluntary. Paying RMDs are completely voluntary. Now, how can that be?
Okay.
How can that be? Because we've all been told that RMDs are forced taxation at, whenever you have to start taking, let's just say 73 based on when you were born.
Somebody at the IRS just went, go on.
Yeah. Oh, yeah. Say more. Tell me more about how you can, how it's voluntary. Yeah. Get that guy's client list. RMDs are voluntary because you do not have to wait until 73 to start drawing down your qualified accounts. So it's totally your choice. If you want to continue to carry a balance in your qualified accounts past the point of you get the choice to take it out or not. If you want to carry it into that RMD phase, 73 and later, then you're going to have RMDs. But you made the decision to do that. And here's why I say that. When can you do a Roth conversion? When can you do a Roth conversion?
Anytime.
Anytime.
Yeah.
In what increments?
Any increment?
Any increment.
Yeah.
So you're telling me, Mark, I can do a Roth conversion at any time. We're talking, let's be specific. We got to be careful. Sure. You got qualified accounts. Let's just say it's IRA money. You got IRA money. You can do a Roth conversion when?
Anytime.
And you can do it in what increment?
Any increment.
Any increment. You just have to pay the tax.
Sure.
And now you have funds in a Roth IRA. So if you decided to never do Roth conversions, then yeah, you're going to have RMDs. And guess what? If you get to 73 and you decide, you know what, I'm going to start doing my Roth conversions now to avoid my RMDs, nope, no, you waited too long. You don't actually get to satisfy your RMD with a Roth conversion once you hit 73. So for all of you listening out there, if you are not taking RMDs right now because you're not required to yet,
right,
I'm telling you, you have an opportunity to do Roth conversions right now. And if you do enough of them, you can completely eliminate the need to take a required minimum distribution. If you wait too long, the IRS will not count your Roth conversion as an RMD, even though it's the exact same thing. In fact, let me take it a step further. If you wait too long and you take your RMD, you've paid tax on that money, right? What's the difference between a $50,000 RMD at age 74 and a $50,000 Roth conversion at age 70? Assuming you're in the same tax bracket, assuming all that's the same, what's the difference?
4 years.
The difference is one is now tax-free,
Yeah.
the pre-73 Roth conversion. The other can never be tax-free. If you take an RMD, that goes into your brokerage account. Now you're paying 1099s forever. So listen up. This is important. RMDs are voluntary. Do you think that the IRS wants you to do all your Roth conversions pre-73? Or do you think they want you to wait till 73 so that they can force you to take money out of your qualified accounts, tax you on it, force you to put it into a brokerage account, and now send you 1099s every year?
They're begging you to wait.
They're begging you to wait. Listen, RMDs are voluntary. Now, if you've waited too long, you've waited too long, and I'm sorry. But if you haven't waited too long, this is why you need our full-blown retirement plan, because Roth conversions are embedded in our full-blown retirement plan. We will tell you exactly how much to convert, in what amount, in what year, from which account, in order to minimize your lifetime tax, get those dollars over the tax fence, and not have them thrown into a brokerage account to be 1099 to death for the rest of your retirement. So RMDs are voluntary. Let's be smart about this.
Right.
It doesn't take much. It's the exact same thing. A $50,000 conversion is the exact same taxable consequence as a $50,000 RMD, all other things being equal, except one is tax-free forever and one is 1099 forever. Why is no one talking about this?
Why? I'm 100% serious when I say this right now. I've never heard this in my life.
Why is no one talking about it?
You tell me.
I don't know. I'm here talking about it. Here we are on WSB early morning talking about why you guys shouldn't be doing RMDs. Stop it. We got to stop it. We got to stop this madness.
Right.
I think people are scared to pay the tax, but you don't realize you're going to pay the tax one way or another.
Yeah.
One way you get to pay it and stop paying it. The other way you pay it and then you keep paying it.
Fascinating.
Can we all just get smart together? Can we do this together? Let's just start a movement. RMDs are voluntary.
RMDs are voluntary.
They're voluntary.
How many times do you sit down with somebody and you educate them about a situation just like this? They have the same kind of shock on their face that I feel right now, because my whole life I've just been told you got to pay your RMDs, got to do your RMDs. RMDs are a part of a retirement plan. Never once heard that they're voluntary. Like, these strategies, never even heard of it.
I would say there's about 10% of our clients out there that are like, that's why I'm working with you, Matt, because you're talking about the thing that I've been saying for years. And then there's 90% of our clients that are like, this is why I'm working with you, because I never would have known this.
Yeah. Fascinating. It's all part of the tax strategy, RMDs as well. From the team of the Vincent Financial Group, 770-741-0120. Again, 770-741-0120. They're going to help you find strategies you didn't know existed. You didn't know that you could take advantage of. It's part of that retirement roadmap. They want to sit down with you, customize a plan, or maybe have this conversation, and then from there, they're going to let you take that customized plan with you. But it begins with that phone call, 770 741-0120, retireatlradio.com. And Matt, before we get out of here, always love to give a shout out to the great team at the Vincent Financial Group. When we come and take advantage of that initial consultation, who are the great people we're going to meet?
Man, you might run into Brady Watkins. You might run into Craig Guffey. You're maybe going to see Aaron Dixon, Aaron Vincent, myself. We're all up there at the office. You may see some of our other clients because we have a lot of traffic in the area. We're right in front of a brand new development there in downtown Woodstock, and we have a lot of clients in that neighborhood. So some people come in and make espressos, and so you might just see walker-bys making espressos. You're going to see us. You're going to probably see some clients. But more than not, you're going to feel comfortable. You're going to feel at home. You're going to feel valued, and you're going to feel like we exist for you. You don't exist for us. And that's what we hope you feel, at least.
I love that. And you mentioned earlier that Zoom consultations also a great opportunity to begin customizing this plan.
Especially initially, with traffic in the Atlanta area, with just how spread out we all are, with conflicting schedules. We do a ton of Zoom calls for those initial calls. And then also, honestly, Mark, we have a lot of clients that, maybe they came into the office at first for the first year or two, and now they've moved 100% online virtual. Mm-hmm. We have a lot of clients that I'm thinking of one. They just moved to South Carolina. They were here in the metro area. They just moved to South Carolina to be closer to their grandkids. They're still clients, and we meet on Zoom, and it's the best. It's so easy. It's so convenient. So whether you want to come into the office, whether you want us to come to you or meet on Zoom, we're here to accommodate you.
I often say there's not a lot from COVID that I appreciate. Zoom is one of them.
Yep.
The ability to use that in day-to-day working life, I do think that's a great advantage. Take advantage of it from the team, from the Vincent Financial Group. Again, it begins with a phone call, 770-741-0120. Matt, thank you. Thank you for the education and the information this weekend. Always get more at retireatlradio.com. And we also invite you to check out the Retire ATL podcast, available across all podcast platforms. We're back next weekend, but for Aaron Vincent and Matthew Deckard, this has been Retire ATL right here on WSB.